one of the companies which might prove to be the result of the day, Pidilite, has managed to report healthy profit and margin expansion in the third quarter. While the Fevicol-maker saw muted growth in top line, volume growth was healthy. Yash is here for more. Yash, volumes, margins, they did exceptionally well on all of these counts.
Absolutely. The top line was largely in line with the expectation. So it grew by about 4% to 1,927 crore rupees versus the expectation of 1,920 crores. Ebitda saw a big jump of 36% on account of the lower crude oil prices. Margins too came in at 24.1%, which is an increase of almost 440 basis points over the previous year period, as well as the net profit saw a 56% jump following the shift to the lower tax regime. So that came in at about 342 crore rupees. In terms of the individual segments, the consumer and bazaar segment, which accounts for almost 90% of its earnings, that saw a muted growth of around 3.8%, while the industrial and paint business that outpaced the growth in the consumer and bazaar segment with a 10% growth. And for a third consecutive quarter, we are seeing that the industrial products business that has been doing fairly better than the consumer and bazaar segment. As far as the volumes are concerned, last quarter they had reported a negative volume growth as far as the consumer and bazaar segment is concerned, but this time they have managed to report a 2% volume growth. The street was widely split as far as the volume growth number is concerned. The estimated range was somewhere between -3 to +3%. So a positive number over here. That is something that the street would really like. Apart from that, the industrial products business that continues to do very well. The volume as well as the value mix growth for the third quarter stood at almost 13%. Lower input cost, that is something that has aided their operational performance. Remember, VAM prices are largely linked to how crude oil prices behave, and according to one of the brokerage reports that I was going through, VAM prices have nearly corrected by almost 15 to 20%, as a result of which we have seen this drastic improvement as far as their operational performance is concerned. Also, the improving product mix has aided in the margins expansion for the company in this quarter. Lastly, the lower tax rate that has boosted their bottom line. The effective tax rate for the quarter stood at somewhere between 24% versus 33.5% in the same quarter last year. But as far as the management commentary is concerned, they have said in their press release that they will continue to focus on volume-led growth, and that is one strategy which even Asian Paints has been applying for the last couple of quarters. So that is as far as the information that we have right now. The analyst call will be held later in the day, which is when we'll have a much greater understanding when the brokerage reports also come in. But we will be speaking to the management any which ways before that to get a better sense as to what is it or which are the geographies that did well, as well as the reasons or the factors why the industrial products business did well.